Welcome to Crash Concepts, where the economy, energy, and the environment are explored. Up next, fresh ideas and insights into the factors that are driving the world and shaping your future. Presenting information you can't afford to live without, here's Chris Martenson.
Hello, it's November 16th, 2010. This is Chris Martenson of chrismartenson.com. And today we're going to be speaking with Ted Butler, silver analyst and champion, about the silver markets. Welcome, Ted.
Hey, Chris. Good to be here.
Well, it's a real pleasure to have you here. As we were just talking about before this started, I've been following you for years, and I just have been a real fan of your work, and I love the analytical approach you bring to it and the calm determination that you've shown over the years in analyzing the silver market. So this is a real pleasure for me.
Those are real kind words. I much appreciate it.
Well, so you've become one of the preeminent commentators on the silver market over the years. So I'm wondering, can you give our listeners a quick history of your background, the expertise you've developed, and how you came to be interested in silver?
Well, I'm going to have to condense perhaps 25 or more years, 30 years into a very short time frame, so forgive me if it's, I'll try and keep it simple. I started out as a commodity broker trainee at Merrill Lynch, I'd guess around 1971 or 2. Spent about 5 years at Merrill, then went on to Drexel Burnham, Lambert in the Miami office for about 10 years or so. And along the way, I became in the mid-'80s attracted towards silver at the urging of a client who's still a very good friend, Izzy Friedman, who issued me the challenge back in the mid-'80s to basically answer a puzzle he had. He had been trading the silver market very profitably for years and had approached me knowing that I did tend to dig into things, and he issued me a challenge that, look, I'm invested in silver. The statistics show that we're producing less than we're consuming, and in spite of this deficit consumption pattern, the price just doesn't go up, and it was about $4 or $5 in that range, and just stuck on a flat line for many years, and I kind of thought, well, I'll be able to look at this and give him a quick answer and be done with it and on to the next thing. But I got stuck. I couldn't come up with an answer as to why the price of silver wasn't moving according to the law of supply and demand. It's what we send our kids to school, hopefully to learn, is, supply, demand, and price. And the price basically serves as a fulcrum to balancing supply and demand, yet that wasn't happening in silver, and I didn't have the answer, and I kept looking, and fortunately, because of my background in futures for so many years at that time, one day it just dawned on me. It was a eureka moment, and it dawned on me that the open interest, the amount of contracts committed on the COMEX, the main silver exchange in the world, basically was out of line when you converted it to real-world supplies and did the same exercise for every other commodity that was traded. You came up with this tremendous aberration in silver, and which led me further to discover that the reason the price was not responding to supply and demand was because the open interest, the long and short paper position, was so much greater than it should have been and greater than production and world supplies at that time, that it was the short position basically was serving as a oversupply factor and depressing the price. When I uncovered this information, I did the upstanding thing, I thought at the time, by going to the commodity regulators, both the CFTC and the exchange itself, and presented the evidence, and they basically told me to go away. It was no problem. But I persisted, and over the years, much later, thanks to the introduction of the Internet and the mailings that Investment Rarities started to do back in around the year 2000, I was able to get the word out, and that there was a manipulation in the silver market due to the very big short position on the COMEX. And as time has gone on, more and more people have come to accept that, and it's resulted in publicity, recent lawsuits, and I think there's going to be a resolution coming from the commodity regulator before long. So how's that for a 25-year condensing?
So if I understand you right, you first uncovered this in the mid-'80s when you were looking into this puzzling supply-demand price mismatch for ISI. That it's been going on that long?
Yes. I tell you, if I had to pick a date, my favorite date going back, and without getting really involved as to why I picked that date, I'd pick it as February of 1983 that I can date this manipulation in silver back to.
Well, what happened on that date? Do you know?
Well, what happened is that's when the first big increase, demonstrable increase in open interest took place, and if you can date it back to then, where the open interest in silver, which had been around the 25,000 contract mark up until that date, exploded up to double that and then triple that. And you can kind of trace back the action and suppression of the price to that increase in the open interest starting around that date, early 1983.
Wow, that's amazing. So I want to get into that in more detail in just a second. We've got some listeners I know who are not going to be all that familiar with silver markets, and so I would like to tap your expertise to set the stage for them a little bit. So for those listeners we've got who are new to the precious metals markets and investing, could you explain, why is it that silver is valuable, and why do you think it might become more valuable over time? Is there anything that we use it for that we can't substitute? We can't do without it. Any critical processes or technologies for which no great substitutes exist?
Yeah, in a simple word, yeah. Silver is both. It's a hybrid metal, and people kind of know this. It's both a precious metal that's been sought by man since the dawn of civilization, along with gold. And over the last 100 or so years, we've discovered some magnificent applications and properties, chemical properties that silver contains. For instance, silver is the best conductor of electricity in the world. Silver is the best transfer agent for heat. Silver is the best reflector of light. Silver is one of the few substances that you can use in photography on a chemical basis. The other one is platinum, but since platinum is almost 100 times the price of silver, they're certainly not going to substitute silver with platinum in that process. Silver is a biocide that can kill viruses. So we use it from everything from lasers to every form of electronics has some silver in it. We use it for medical properties. We're even using it in socks and underwear now, because if you use some silver threads in materials close to the body that sweat, it kills the bacteria that causes bodily odor. So it's an indispensable, it's a miracle metal. The fact that it's been depressed, or I allege it's been depressed in price for so many years, has actually increased its consumption for all these varied products. And there's more applications for industrial applications for silver than for any other metal combined. It's the only commodity I think that has more industrial applications and uses than silver is crude oil itself. So because of this widespread industrial applications that we can use silver for, we have just consumed the heck out of it, and that consumption has basically was the explanation, and because of we were using more than we were producing, we had to draw down from existing world inventories and supplies, which had accumulated over hundreds and hundreds of years. Because of this consumption, and this is a shocker to most people, yet if you do your homework, you can basically verify whether it's true or not. Because we've had so much consumption for all these properties of silver over the last 50 or 100 years that we've actually consumed silver inventories down to the point where there's actually less silver in bullion form in the world than there is gold. In other words, silver is more rare than gold in an inventory bullion equivalent basis, and that's absolutely crazy because the price of silver is, but 2% of what the price of gold is. And anytime you have an item that's more rare than another item, you would think that the more rare item would be more valuable.
Well, you would think that, particularly one that's so magical like silver, which it really is in its uses. And when you say consumed, in some cases we can recover the silver after we've used it. There's a certain percent of recovery after photographic processes, right? We can recover.
Certainly. There is discounting for the recycling of silver, but there's many forms. When I say consumed, I'm talking about the silver that is basically non-recyclable, silver that's put into form that you can't get at, like the material behind the touch pads in a telephone or something like that makes a contact. It's very hard and expensive to go out and recover silver from all the applications and products it's used in, simply because we use so little of it in any one application that it's very cost inefficient to go out and recover something where such a small amount is in the application. So I'm just talking about, we do have a big component of recycling that's part of the supply-demand equation. However, there's a much bigger component where we do use silver, where technically it may not disappear and burn up into the atmosphere like occurs with gasoline or some other commodity, but it's effectively the same thing because we use it in many applications where it's just not practical to recover it, and in those applications I consider consumed and gone forever, and I don't think I'm far off.
Yeah, and that raises a second question for me then, which is, as we look back on the gold production charts, it looks like we hit a peak worldwide at around 2001. A variety of reasons for that, not the least of which is that a lot of the new finds are deeper, it's a little bit more dilute, less high quality than finds in the past. Where do you stand on looking at silver that's left in the ground? How much is there, and what are the quality of the finds today and mines today compared to the past?
Good question. For one thing, we have not hit. We may be getting close, but we have not hit a peak production situation in silver. Even though I don't think it's too far away. We've had an increase in mine production up through the current year, and maybe for the very near term, we'll still have increases in total mine production in silver. However, according to different studies, say from the U.S. Geological Survey, if you compare the amount of silver still in the ground compared to annual consumption, and do that same analysis for every other commodity, gold or copper or base metals, you'll see, according to the U.S. Geological Survey, that we actually have less silver remaining in the ground than any other commodity. I don't want to go so far as to say that means in 15 or 23 years that we'll be out of silver completely. I'm not saying that. What I am saying is, according to the U.S. Geological Survey, compared to every other commodity, silver has less life in the ground in terms of years, world production than any other commodity. The other aspect about silver, as far as its mine production, is that the bulk of it, as much as 65-70% of total mine production from silver, comes as a byproduct of other metals, gold, copper, zinc, lead, and therefore it's kind of captive to the prices of these other metals. If silver were to shoot up for whatever reason, and I can think of a lot of them, you wouldn't find people stampeding necessarily to open up byproduct mines if the other metals didn't move, appropriately and accordingly with silver. So silver is pretty price inelastic on the production side. you're not asking, but it's also very price inelastic on the demand consumption side because we use so little per application for the many, many tens of thousands of applications that we do use silver for. So it's kind of an exciting backdrop. In other words, if silver were to jump up from a production point of view, you're not just going to flip a switch and start producing new silver out of the ground from new mines immediately. It can take as many as 10 years or more for a good silver deposit to be found and brought to production, and that's not going to help much in a short-term price spike.
Yeah, it's something that I think is true of almost any mine. I see the same dynamic happening in the uranium field right now, where people are looking forward at all the uranium that's going to be needed for all the new nuclear plants, and some people are forgetting how long it takes to get the permits, to get everything squared away, get your infrastructure in place before you even start digging anything out of the ground. It's just there's quite a lead time there, and I assume silver's got the same mining dynamics as anything else. So,
good observation. No, I agree with that.
Yeah. Let me turn really quickly to the recent price action of silver. I got pretty excited watching it. I think it hit 29 and change, maybe 29.20 there for a brief bit before it's reversed. And I'm sure you've been tracking the price very, very closely through all of this. So what do you make of the recent price action? Do you think that this is related to QE2, and how much was related to that euphoria that happened after that next $600 billion announcement? And more importantly, what might have the impact of Mr. Chilton's surprising admission there, which really made me sit up and take notice? I'd like to discuss both those things, but maybe price first.
Sure. I mean, it's one man's opinion, and I'm not the word of God on silver, so it's just, please keep in mind, it's just my opinion. I'm a supply-demand guy on silver, and therefore I look at things that are unique to silver that should move the price. Things like QE2 or currency changes or general economic conditions, these things are generally have a bearing on commodities in general, and in that regard, it's no different in silver. But if you look under the hood at the things that are specific to silver, the price reaction, I think, over the last several months is we're coming to terms with the resolution of this long-term silver manipulation. I think it's going to die someday. I think it's going to die someday soon. And when it does, you're going to have a good bit of price violence and volatility, and that's kind of exactly what we've seen. So we're making a transition. I think that the price moves, say, from the end of August, when we were about $18 or so, up to the $29 mark, as you pointed out last week, back down to touched under 25 as we speak sometime today. This is kind of like a reaction to, in my mind, to the manipulation coming to a resolution. And the one thing I will say is that because it's been suppressed in price for so many years, that it's going to be necessary that there be tremendous price violence. So my first observation would be, if you think this is price violence or price volatility, you ain't seen nothing yet. We're going to have a continued process of increasing volatility and price movement. The path of least resistance is to the upside. Along with that, as part of your second question, Commissioner Bart Chilton, several weeks ago, mentioned at a public hearing, and I mean it much to his credit, he's very much to be commended for this, brought up the issue of the ongoing silver manipulation, which I basically initiated back in September of 2008 by asking people to write into the commission concerning the tremendous concentration on the short side that was apparent in one of their reports that they issued in August of 2008, their bank participation report. And there's so many people wrote in because of this unusual concentration on the short side by only one or two U.S. banks, who subsequently I was able to identify through correspondence from the CFTC to various elected officials that it was basically J.P. Morgan. This is very rare to be able to mention a name because under commodity law, the commission is precluded and disallowed from revealing the identity of any participant, any trader in the market. In this particular case, the concentration held by J.P. Morgan was so extreme and noticeable that even attempts to shield their identity was basically futile, and kind of everybody knows it's J.P. Morgan now due to the correspondence and public reports that came out from the commission, and the initiation of that investigation a little over 2 years ago has been dragging on, and again, Commissioner Chilton, much to his credit, basically asked the obvious and open question, what's going on here? We got people, hundreds of people, thousands of people writing in wanting to know what's the status with this silver investigation, and we're just basically twiddling our thumbs, and that's not right. So he called for an immediate or soon to be resolved situation. If there's nothing wrong and there is no manipulation, fine, let's say it, get it out. If there is something wrong, well then basically this is a crime in progress if my allegations are correct, and if that's the case, it should be terminated immediately. So by Commissioner Chilton going public and asking and requesting and demanding that the Commodity Commission speak up one way or another, because the public has a right to know, the mere mention of this, that bringing this into making a public statement that this thing should be resolved one way or another, was interpreted by the legal community as almost an admission by the Commodity Commission that there might be something or was something wrong in silver, and it's brought out a slew of lawsuits seeking class action status from various legal entities. I just found out this morning an attorney had told me that there was as many as 25 separate lawsuits filed as a result of this, and all seeking class status. They have to be consolidated, but the basic thing was that they all came about simply because Commissioner Chilton raised the issue publicly. It's had a big impact, I believe, on the market. It will continue to have a big impact, and it goes back to, it's one of the things behind my conviction that the price of silver going forward is going to be determined by the resolution of the manipulation.
Fantastic description. I'm wondering, in these lawsuits, have you heard any hint yet that are these all private investors, or has any hedge fund or larger money started to join in on this yet?
Well, I know personally one of the plaintiffs named as a lead plaintiff in one of the lawsuits. I don't know the others, but the way they've been described, they were basically investors or speculators in COMEX futures at the time of the big takedown in the summer and fall of 2008 that suffered as a result of that. So I've seen some of the names. I don't know them personally except for one. So I don't know if it's individuals or hedge funds. It wouldn't make a difference if you've been cheated. It doesn't make a difference, who you are. You're entitled to seek redress.
Mm-hmm. Mm-hmm. And so it was really interesting that Mr. Chilton came forward. I'm wondering, so he's a commissioner. There are a number of commissioners. Where do you think the chairman, Gary Gensler, where is he in this story?
I think he's playing the central role, even though he hasn't spoken out on this particular issue, and really, nor should he. He's a relative newcomer. He's only been in office since May of 2009, so obviously his tenure postdates the start of the silver investigation. There's been many silver investigations over the years, which I've been responsible for from the CFTC. This is only the latest of many, but in to place Chairman Gensler's role in this, he came in after all this stuff was done. Basically, I've early on, like starting almost the day he was there, I could see that this was a different creature, a different chairman than any previous chairman. I have a history with the CFTC going back 3 decades, and I can tell you that Gensler is of a different mold, and that's very much a compliment. He's a dedicated, not only a dedicated public servant interested in the interests of the American people, in my mind, he is also probably the smartest guy in the room. He is good market background. He was a former partner at the time, the youngest in the history of Goldman Sachs. Lots of people want to hold that against him as somehow making him unfit for office, but I don't look at it that way. From the get-go, I've been praising this guy as the greatest chairman in CFTC history. I think he walks on water as far as what he's done for the market. So even though he hasn't spoken out specifically on the silver manipulation or the silver investigation, I don't think that's his role. I think his role is in what he has been doing is setting up the Commodity Commission, participating in the formation of this Dodd-Frank Financial Reform Act. I think he's played the central role in bringing this silver manipulation to an end, even though it's kind of behind the scenes and not out in front and in your face. He's a very he's a type of individual that's not seeking personal attention or fanfare or popularity. He's interested in getting the job done and is very much interested in letting other people take the credit for it. And for that very reason, it's kind of like my own personality inclinations. Just get it done. And for that reason, I think the guy is aces.
That is really good to hear. I'm really pleased to hear that because we need some good people in those sorts of positions. Besides bringing a lawsuit, is there anything that somebody listening to this now can do to weigh in on this story? Or is the comment period over on this? Or if somebody wanted to add their voice to bring?
Oh no, it's really just beginning. Even though the hour is growing late, and we haven't even. There is a specific thing that people could do if they become convinced that this is a legitimate thing to do. They educate themselves. They go to the to the internet and pick up as much information as they can. The key determining feature to whether this silver manipulation is going to continue. At about the same time I started making these allegations more than 25 years ago, I also provided what I thought was a constructive solution to ending it. And the constructive solution to ending this manipulation in silver, which is hinged on this concentrated position on the short side. Concentration is when very few entities hold extremely large positions, and that's the first sign of manipulation. You can't have a manipulation without a concentrated position. The example I would use, and you can use every manipulation we've ever had, but the silver manipulation to the upside in 1980 was caused clearly by the Hunt brothers and their associates holding a tremendously large percentage of the market, and they basically squeezed and got a corner on the market and drove the price up. People understand that, but the key was the concentrated position that they had. In this case, the concentration also in the silver market is on the short side, and that's a little bit more difficult for people to understand, but this concentration can be solved and made to dissipate and go away with legitimate position limits, and something I've been advocating for more than 20 years. I didn't just complain about the manipulation. I basically pointed out what the solution to it was, and I've been fought all the way by the Commission, by the Commodity Commission and the Exchange. Now, thanks to Gensler and also to Bart Chilton, the commissioner, we are basically coming up on a full exposure and proposal to what position limits, what legitimate speculative position limits should be in silver. The dirty little secret is that position limits are not a problem in any commodity except for silver. And within the next month or two, the Commission is going to be considering proposals for what those position limits should be in all the markets of finite supply, energies, metals, agriculture. If you go to the CFTC website, you have ample opportunity to weigh in on the issue. I've put forth a paper that's on there that a lot of people have seconded, and that's namely that the legitimate position limits should be no more than 1% of total world production. In the case of silver, that would be about 1,400 to 1,500 contracts, as opposed to the 6,000 contracts that isn't even enforced today. So there is a looming resolution and deadline in silver, the silver manipulation via this position limit issue, which I think is all important, and I would encourage anybody who has a remote interest in this to basically try and figure out what the issues are involved here. And it's, again, something that the CFTC is openly soliciting your comments. They want to hear from the public. The public has been unanimous. They came back a number of times and have said it should be 1,500 contracts in silver. I'm still waiting for anybody else to come up with an alternative number and a reason why it should be that. So it's a good question that you ask, and it's going to be, it could be a bombshell for the silver market. It should be a bombshell, I know that, and very well could be, and it could be coming real soon, within a month or two.
Well, that's fantastic that there's still time to weigh in. So what we're going to do is we're going to put this podcast up, and at the bottom we're going to have a link that's going to go to the CFTC page so that people can find that more easily, because this is a really, really important issue here, particularly for anybody who's holding silver. But in general, our markets, if they're not free, they're not fair. It really is a corrosive effect overall, I think. And so I'm firmly in your camp on this one, no question about it.
You'll be doing a great public service. Not that anybody has to agree with what I suggest that the limit should be, but at least to think about it and weigh in on the issue. Very rarely have we had this opportunity in the past, as you know, Chris.
Oh, I know. It's been a long time coming. So you must feel incredibly vindicated at this point in time. I mean, it's just I just have to thank you for your persistence in this. I mean, that's been a long, hard road you've been on, and I know that can be lonely work at times, but you've been there and you've kept at it, and to see this kind of impact that you've had just must be incredibly gratifying.
At times it is. It's less gratifying on days like today when they knock the price down, but it is overall gratifying, and I thank you very much for the comments. I don't know what motivated me to stick to it so long, except for maybe just a sense of outrage that something really underhanded was going on, and it was just frustrating that nobody lifted a finger to do anything about it. And I guess I felt a personal responsibility to follow through.
Yeah, and thank you for that. And I also know you do incredible work analyzing the silver markets. For those who want to follow your work more closely, how do they do that?
Well, there's a number of free articles on the internet. Look under Ted Butler Silver or something like that under Google. I do have my own private subscription service, butlerresearch.com, that you can try for a month or so. It's also available on the internet. But there's plenty of stuff that you don't have to pay for, but I do provide an active private subscription site as well.
Yep, I understand, and I think you do great work. So that's all for the public portion of this podcast. Many of our enrolled members, however, are really sophisticated investors and traders. And in the next part of the podcast, what I want to do is I want to dig into those mechanisms of how those concentrated positions serve to manipulate prices. I know you mentioned the Hunt brothers on the long side, but to help demystify it a little bit on the short side, what I'd like to do is move into that on the next part. So if you're listening to this and you're not an enrolled member, you can simply go to chrismartinson.com, click Enroll Now, follow the instructions, and join us for an illuminating conversation on the silver markets. Thank you, Ted, and thank you, everybody, for listening.
Thank you, Chris. It's been a pleasure.
This concludes this podcast by Chris Martenson. To gain further insights into where things stand today and what might happen tomorrow, please visit chrismartenson.com. That's CHRISMARTENSON.com. Please join Chris Martenson next time to continue your journey towards awareness, understanding, and action.